Hey everybody, it's me, Gregory Mannarino, back for my post-market wrap-up for this lovely day. Lovely day. And we're going to talk about this extraordinary day in some ways, actually in a lot of ways. Monday, January 29th, 2018. So here's what happened today. The markets, all of the major indices, finished in the negative, reasonably substantially. Why? Well, it's this bond market, and I've been explaining this to all of you, how important it is to watch the action here in the bond market. Today, the U.S. 10-year yield hit a high of 2.72. The spread between the 10-year yield and the 30 starting to narrow. Market doesn't like this. As a matter of fact, what happened today? Very interesting. Around 9:45 a.m. Pacific Standard Time, they started to buy up the bonds. And what did that do? Well, stocks started to move higher along with the propping up of the bond market. Do you want to see what this looks like? Do you want to have a look at this? Go to my website, traderschoice.net, right side of the page, underneath the chat room. You will see exactly where they started buying. Green, 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 green. That helped prop up the stock market, which had been initially down 160 points. Soon as the propping up started, those losses were cut in half. And then it didn't hold. For whatever reason, the market got spooked, again, because of this action here in the bond market, and finished down nearly 180 points. Now, I am not saying this is going to continue, because I firmly believe right now, and I could be wrong on this, but I'm just telling you what I believe, that we are going to see some hardcore propping up of the bond market, probably overnight and obviously into the trading day tomorrow. How am I taking advantage of all this? You know this if you follow me on my social networks. Right here, I bought Goldman Sachs April in the money calls, which made cash today. So I'm a happy guy. And I think this is going to play out to be a profitable trade. Could I be wrong on that too? Absolutely. Should I have pulled profits today? Maybe. At one point I was up over 6%. But we'll see how that plays out over the next couple of days. Look, here's the situation. They will not allow, mark my words, they will not allow the bond market to meaningfully sell off. The Federal Reserve, along with the banks, through whatever means they have to do, will buy up the bond market. In this environment of absolute fantasy land and fakery off the freaking Richter scale, that's what's going to happen. That's why I bought calls here. I don't want to short this market. I do not want to short. Remember what happened to me the other day? I went short on ticker IWM, the Russell 2000. Made a mistake there because it did pull back. I was up like 3%. I did not pull the trigger to sell. Turned that into a loss. I did reverse that, though, by buying calls on the Qs, which did very well by the end of the day. I do not want to short this market here. Despite this, we saw something today very interesting. Okay, the dollar, the knee-jerk higher. Did you see that? The dollar got a bid today. Whenever the market gets in trouble, the knee-jerk reaction is into the dollar. So we saw the knee-jerk reaction of a dollar that caught a bid. Metals got hammered. This is the typical knee-jerk that happens when you have this kind of action. There's no doubt about it. And we're seeing it again. It's the same thing. It's like a fingerprint. It just doesn't change. But again, we need to watch this moving forward. I could be absolutely wrong here, meaning they might very well allow the bond market to finally, establish a fair value, which means everything around you is about to change and change rapidly. That's why I don't believe they're going to do it. I could be wrong on this. For all we know, we are at the moment. We'll see over the next couple of days because, as I said on Friday, I believe this week here is going to be bullish. I could be very wrong, but that's just my take right now, meaning that today's 177 point drop in the Dow would have to recover that and then some this week. A lot of earnings coming in this week. We got the speech from the president who's going to make sure he blows sunshine up the crack of this market. No doubt about it. They're probably rewriting his speech right now to make sure he hits the mark so stocks go up. You understand? So that's where we stand now, people. No doubt in my mind, at least at this point, that we are going to see some more rigging of the bond market. They cannot stop. If they stop and they allow the bond market to establish the fair value for debt, nobody watching this video, nor anyone on this planet, is smart enough to know what the actual value of debt is. Me personally, I think it's negative, which would mean yields would have to be, again, I'm not smart enough to even put a number on it, but exponentially higher than they are now. The debt is a liability. It's not an asset. Well, they want you to think it's an asset, but it is not an asset in any way, shape, or form. Anyway, so we're going to see how this plays out moving forward. Keep your eye on that bond market. Can't stress that enough. Let's see what they do overnight. Let's see what they do tomorrow. Keep your eye on that dollar. Caught a bid on the back of this whole nonsense with the bond market selling off. Watch metals. Watch cryptocurrencies as well, which in this environment really should be catching a bid. But that's also, that whole market is also rigged as well. It's a shame. It's such a freaking shame. Really. All right. Whatever. I'm not going to go off the deep end on that. You know what to watch. Go have a look at the chart on my website of where they started buying up those bonds around 9:45 a.m. this morning. Didn't work. Doesn't mean it's not going to work tomorrow. But we'll see. We'll see how this plays out. We will address all of this in the morning. I'll see you then. Over and out.